Hey guys, this is a quick tip from me as your real estate agent. Make sure that you get your student loans out of forbearance. This is tip number one before you start the process of applying for a mortgage. The reason is that it's going to affect your debt to income ratio. So if they're in forbearance, it's like, it's great, you don't have to make a payment. But whenever you go to apply for credit, your debt to income ratio looks at 1% of the amount due, the complete amount. So if you owe 30,000, it looks like your payment would be 300 a month. And as we all know, most people when they're in their payment process are not paying 300 a month for a $30,000 student loan. So keep that in mind. That's one of the tips that I give to my clients in order to prepare and get themselves ready is go ahead and get those things out of forbearance. If you're building your credit, you also want to make sure that you take action. It's a different scenario though. If you're building your credit, you're not about to actively apply for the mortgage, you're just trying to get some bonus points. Well, while it's in forbearance, make payments because you're paying off the principal, which shows a decline in the balance. Every time you every time you lower and decrease the balance on any of the accounts, it's going to jump up and increase your score. Every little bit helps. I mean, even just paying like $10 or $20 for the principal is going to show a reporting to, Equifax, Experian, TransUnion that says this person had a balance decrease. And that's what you want to see. It'll give you those little bonus points here and there. So it's two different situations. If you're thinking about buying within the next few months, get your accounts out of forbearance so that way you can get that lower payment amount. Now, how low can it go? Well, you can also go into income based, but you can also do hardship. You can also do graduated repayment. There's like several different options your servicer will have available. Get whichever one's going to be the lower amount. Okay, you can pay more, of course, but this just looks good for your debt to income ratio if your only required payment is like $20 or $30 a month. Your mortgage company or your bank is going to say that looks really good for debt to income ratio. So keep these things in mind. But once again, that's if you're going to be buying within the next few months. If you're not going to buy until later in the year and you just want to get some, a little extra boost to your credit, you guys need to keep it in forbearance, but make payments because the more you pay toward the principal, the higher your credit score is going to go. So talk to you guys soon. I'm going to make other videos very frequently for the next week because it's tax refund season. This is a great time to utilize that tax refund toward, purchasing property or expanding your real estate portfolio, whatever your situation is. It's a great time to do that. So I'll be giving lots of bonus points, bonus tips in this coming week. And don't forget to let me know if you want to have a consultation because everybody's situation is going to be a little bit different. So every time I do a consultation, I rarely give the same advice to every person because you got to look at your situation is different. Your goals are going to be different. And so it's important to have a real estate agent that's going to understand what process is best for you as an individual because it's not always the same for every person. And that's something that I, hold very true to myself in giving you guys the right advice, not just saying, do this just because that's what everybody should do. That's not how that works. So be sure to drop your information into a comment or a message so that we can have a conversation or just send me a text message and we'll schedule a time. Talk to you guys soon.